All right, testing, testing. 1, 2, 3, testing. 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your pants. Just got to get to the chat. I don't have the chat open yet. Hang on. Okay, well, hey, welcome, welcome, welcome. It is a Thursday, July 15th in the year of our Lord 2021. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Let's go! Hey, good morning. Good to see you. Welcome to my office. My name is Wayne. I'm a currency trader. So today we're going to do euro, dollar, pound, yen, Kiwi, Aussie, Bitcoin, gold, oil. I guess that's it. So ask questions, get involved, participate in the chat, treat your fellow currency traders with dignity and respect. I'd like to thank you for all the positive energy you bring. If you have negative energy, check it at the door. We're not interested. Okay, go cry somewhere else. So let me know how I can help. I can do that on the macro side. I can help that on the technical side. Very cool. I'd also like to thank Traders Way for being part of our community. You're a trader. You're going to need a broker, yo. How about one that you trust? Yeah. So you gotta start that process. So visit tradersway.com, open up a demo account, download MT4 or MT5. Cool, you're off to go. Okay, off to the races. So practice trading. What you'll find over time is you have a fast execution speeds, narrow spreads, wide swaps, world-class customer service. Yeah, so they earned my loyalty and respect. Perhaps you should give them an opportunity to earn yours. Tradersway.com. What is going on here? Wow. All right, I think maybe I need to make some adjustments. Holy smokes, eh? Oh, for sure. Get a little more on. Did he say more? All right, that'll do, pig, that'll do. Great. Cool, that'll do. Yes, I am back. Congratulations for your multiple 100% in my MIT classes. Thank you very much. Basically, you're MIT certified genius. I'm also beautiful. Still sharing your ideas and time with fools. Oh, Mr. Sangam. Oh, now. Yeah. Here's the thing. When you take a class, you're educated. That's it. Okay, so there's another level that we need to do. So Yes, I'm a highly educated person. Doesn't make me smart. Just makes me educated. All right, cool. It also makes me sound, I can throw $3 grand here and there and take classes, which is also a privilege, and I understand and appreciate that privilege, so I take advantage of it. Coolio. So anyways, let's get on with it right now. Technically speaking, on this time frame, the market for the pound a yen, okay, pound a yen, 4-hour chart. The market for pound yen is still technically bearish. Ooh, my ghee is chunky this morning. Nothing like chunky ghee. So that's the first thing I see. I'm okay with it. There's still hope, but I'm not going to invest money based on hope. But there's a couple of things, like I could make a big stink out of M2, but generally I'm not going to. But then I could look at a different time frame and say, well, what if I wait for the dailies to step up? Okay. Darko says, hey, last night, customer support from Traders Way. So you contacted them last night. They responded in a short time. They came to explain with great detail. Much better. Very satisfied. Awesome. Cool. Thank you, Darko. Hey, good morning, Jean-Guy. JGB. All right, so anyway, so I look at it, and it's not bullish yet, so I don't have to get too excited. That kind of makes sense, even though that is something completely different. I mean, what I want to do is this kind of stuff. So I don't have to be the first one in. There's no glory in Forex. Technically, this is still very bearish. Technically, you can see over this time period of a couple of weeks, it's definitely bearish. This is a sell, this is a sell. And if you're day trading, this is a very basic sell. As a day trader, you should know that that's your sell zone. Anyone that's taken the day trading course knows that. It's pretty basic, so hopefully you got it. Right? Notice there's no webcam, huh? Weird. Those are images, video capture device. I don't think that's it either. Oh, maybe it is. It's interesting because it's not pulling webcam, but the webcam thinks it's on, but whatever. You said Mexico becomes the first to raise interest rates. I did. That means they have to pay attention to central banks in the world, Pakistan. I don't remember saying that. I wonder why I said it. Interesting. All right. Cool. So anyways, yeah, I mean, yeah, you wait, right? So cool. We're getting there. Remember, based on seasonality, I'm not really looking to be bold. I've given you permission to day trade and shoot at rabbits, which is another way of saying you can buy the yen and you can buy the dollar as long as it's on shorter periods of time, like scalping, market opens, day trading, that kind of stuff. Batu wants to know the perfect time frame. Batu, every single time frame is perfectly accurate. So it comes down to what decision are you trying to make? Batu, are you trying to decide what the Aussie dollar is going to do over the next 20 minutes, 2 hours, 8 hours, 1 day, 3 days, 7 days, a week, a quarter, a year? They're all going to have different time frames in which you would analyze. So you probably wouldn't analyze the day candles to try to figure out what's going to happen in the next 20 minutes. Now, the very interesting thing is you could, and at the right time of day, it works really, really well. But most of the time, you're going to have to incorporate both time frames. Okay? So which one works perfect? They all work perfectly. It's your decision-making process that you have to consider. Okay? So anyways, we could take a look at that. So one of the ways I make this decision is I ask, what direction is momentum? In the moment. In the moment. What's price doing now? And I could say, well, in that period, it looks pretty much down. I can incorporate more time, and it's still going to be down. Okay? Cool. So you start here, and what do we know about a downward trend? By the way, I expect 1 million likes for this. At least 1 million thumbs up. This is going to get real. Okay? If you are expecting a downtrend by your analysis, then this is what we're looking for. Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 up, sell. Down, 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 down. In which you're selling the ups. So going into reality now, down, 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 up, sell. Down, 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 up, sell. Down, 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 down is where we are now. Okay, wait for it. You grab this part, drag it across. Boom, shalaka-laka. Okay. Okay, and there you are. Okay. Okay. But I just showed you price action. That's the easiest thing. Okay, I'm using price action pivot points, and I'm using eyeball strategy. Okay, that is price action. Okay, and you mean what time frame? I'm answering you about to. Write this down. Every single time frame works perfectly. You asked which one is perfect. They're all perfect. What you have to decide is, are you a bull or a bear? I look at this, I could say technically this is bearish. So now price action is ridiculously easy. You sell lower highs. That's what price action is. And the cusp, and by the way, I don't know if you've taken my price action course. It's only, 4 hours long. This doesn't get any easier. That's it. Okay, if you miss that, you're either not a bear or you're not using price action. Okay. But this is a simple role reversal. But it's also a weekly central pivot. Okay. Kicking off of a monthly central pivot with seasonality. Okay. If you go back to like May and June, I said, get ready. The yen is supposed to get stronger than the dollar. And I said, the yen has been very, very weak for a long time. Don't be shocked if we lose some of the weakness. Okay. Okay. But that's on a 4-hour chart. You're like, but Wayne, what is a 1 hour better? It's no better and no worse. You're just changing the time frame. So once again, if you don't see this as longer term price action, you're going to have a lot of problem planning. Then when you hit this price, now you want to use price action again. 100% retracement is what? A reversal. So you sell the lower high, probably off of the shoulder. Done. Down, 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 up, up, sell, down, 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 down. Well, look, once again, it's a breakout roll reversal. Okay. Down, 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 up, up, sell, down, down, down. Oh, you know what? There's probably going to be a challenge down here. So now you're using 1 hour price action. And this tells me really you should have been on this, really yesterday, because on this time frame, as you guys know, and I just did training on this recently, this is technically a bearish market. Okay? So now you can get in the business right from then, if that's what you're doing. This is you using analysis. I could, right now I'm programming algos. Well, I'm not programming. I'm doing an algorithmic trading program at Oxford, right? In a sense, you should think of it this way. Are you teachable? Are you teachable? I can teach a computer and I can say, wait for the market to turn bearish and then start selling lower highs. The computer doesn't get all upset. So it's like, what are your rules of engagement? How would you like to be programmed? Okay, so this is what we're doing at school. And the rules are generating signals, right? Okay, see, end of day, start of day, return, boop, 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 in, out, boop, 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 long, short, 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 long, 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 short, short, long, long, long. Well, there's rules to how this algo interacts with the market. Many of you trade with no rules at all. Okay? Now, your mommy and daddy probably taught you how to follow rules, and that's good. So, in a situation like this, I could tell a computer, look, only sell in this time frame. Sell what, you say? Well, how about lower highs? Lower low, lower high, sell! Okay, cool. Makes a new lower low. So what would the computer do? Look for the old support, look for the old lower low. It might be the new lower high. Up, up, sell. Boom. Down, down, down. Oh, the computer's going to go, aha, this is an old lower low. So if price comes up, I'm going to sell. Okay? But many of you forget to make decisions. And I don't know what you do. So that's how you teach a computer, for example. I'm not saying that's the right way, but the process is what I'm trying to tell you. So if you were trying to program it, you would have to say, well, only sell lower highs in a bearish market. Define bearish market. In my book, I define it as exactly that moment. Now, is that the right time frame? For day trading, medium term, like, yeah, you can get a couple of days out of these price action moves. But I've made the decision first. Okay? Now, you want to see how you become even better? What if you looked at the 4 hour instead of the 1 hour? And you will know, because I already explained it, that I see this as an opportunity to sell because I already know on the 4 hour, that's a sell. So now you can refine what you've been doing because now you're looking at multiple time frames and you can say, well, that gives me the advantage because I can sell on this one and I can sell on this one and this one and this one and this one. Okay, and now this entry on this time frame, on the 4 hour instead of the 1 hour, might say, don't worry too much about this. So maybe take profit on the last three to book some profit, get out on this, this, and this, but hold this one and hold this one for the lower low on those time frames. So these might actually be 15-minute chart trades. This might be a 1 hour chart trade. This might be a 4 hour chart trade. Which one is right? Which one is the perfect time frame for price action? Every single one of them. Okay? Remember, I don't know what tools you use. Maybe you use tools similar to me. Maybe you use tools completely different from me. None of it actually matters because you're trying to use tools to make a decision. If you're still stuck on trying to figure out what signals your tools are giving you, then you're going to fail. Your tools are not making signals. You're supposed to make decisions and therefore use the tools to help you make decisions. Always focus on that. If you're not creating the alpha, then I don't need you and I'm not going to pay you 20% and a management fee when I can just pay $200 to have an algo built for MT4 or MT5 and it never takes vacations. Okay. Darko, those would be your risk management decisions. And so depends on the algo. So anyways, yeah, they all work perfectly. And that's what's exciting. We have tools that work very, very, very well. So like we could take a look at Beast. Now we found out today there's more, or was it yesterday? I can't even remember anymore. There's a little more inflation out of the UK and maybe they have to get out of quantitative easing faster. Who knows? Blah, 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 blah. Media trying to make news out of nothing during a pouring market. But let's start with this. Okay. What time frame am I? Okay. I'm on a 4 hour chart. Let me back out. At this exact moment in time, the market became bearish. Okay. If you're a bull, that tells you to stop. You understand that? That might be the greatest thing you learn is when you read the market conditions have changed against you, you do not fight. You're not that big. Sorry, I'm not that big. I'm not even remotely close to being that big. Okay? So you say, well, I'm a bull. This is now technically bearish. I guess I'll wait. Do you understand that there still isn't a trade? This occurred. Okay, here's the day I said you should really be considered getting out. It was actually the Friday, if you remember, the Friday after the Fed meeting, which is probably about here. And then a couple more days go by and then boom. Okay, the market literally turns bearish. So it's kind of interesting. But let me clear all that. Just want to point that out. So the reason I point that out is about a week before it technically turned bearish in here, I guess you could argue it turned bearish in here, right? Let me do that. Okay, there was a first one. This is probably a false cross especially on a daily. So look at this. That's the actual June 16th. And I said, that's the most important, right, day of the first half. But anyways, so here, this is confirming that we do not have a new higher high. This is a lower high. Then the market technically turns bearish. So now you're only looking for other lower highs to sell. What else? What other tools could you use? Well, you can see I'm using pivot points, weekly pivot points. Okay, cool. This is a sell zone for that entire week. It gave you a front run and a Monday night. Cool. What else is going? This is the sell zone for this week. Okay. What else we got going on here? Price action pivot points. The slope of the trend in the mean is negative, and these are standard deviations from the mean. And what it's telling you, it's a bear. The market is bearish. Cool. Nice. So once again, using that information, this could be considered a sell like this. Cool. Now, you see these green boxes? They're set for bulls. Why? Because, well, I'm bullish. So what I'm looking at is not these for buying. I don't buy, generally speaking, when the market's falling. So I don't really care. But if the market somehow does one of these dipsy-do things, then I can start grabbing them. But I need higher lows, not lower lows. Okay? So one of the things you can see here, if you're a bear because of this, bear because of seasonality, bear because of the weekly pivots, bearish because of the price action pivot points, then you wouldn't have your bias pivots set like me in bullish mode. You'd have them set in bearish mode because you're trading, you're shooting at rabbits. I've given you permission to shoot at rabbits. Shoot at rabbits, make some income. Okay, cool. Well, what does that mean? Well, this is a sell. This is a sell. This was a sell. This was a sell. This was a sell. And today this was a sell. Probably all but one worked. Why? You're selling in a downtrend. Okay. Nelson says, hey, those visual standard deviation and regression tools you have been, well, they're price action pivot points. Very similar. Okay. But for example, Nelson, for example, like let me do this. What are pivot points? Well, here's a central pivot. How is that calculated? Well, you have to look at the previous time. So actually, let me delete that. Let's start over again. This is a central pivot. How did we calculate that? Okay. Well, we looked at this period of time. Okay. Which we call the market. What did the market do last week? Okay. Cool. And we do some calculations. The highest price, plus the lowest price, plus the closing price. Divide that by 3, and you get a weighted mean. A weighted mean. The reason it's weighted is you put in the sentiment of the market at the close. See, the market might have started bullish and crashed, but if it stayed low, it's very, very bearish on the last day of the month, which means the next month might be bearish. Or it closed neutral, or it closed bullish. It might have started bullish, gone bearish, but if it closes, then in the beginning, it might still be bullish, right? So it's a weighted mean that incorporates sentiment. And then you do some basic calculations, okay? And S1 and R1 those calculations, if you look at the math, is very similar to standard deviation. It is, but it isn't, but whatever. And then what? You could also kind of look at two standard deviations. Okay? All of these two lines, let me redo all this. Okay? You cannot calculate this line or this line or this line or this line. You cannot calculate them if you don't know what the central pivot is. So this is right? This is the variable, and these are all dependent on the variable. So this is the high plus the low plus the close divided by, close, divided by 3 to give you the mean. And then you can say, well, how far does price tend to deviate from the mean? So you look at things like this maybe, and you come up with standard deviation here, standard deviation here, and then 2 standard deviations, right? That kind of stuff. And then you calculate the midpoint, which is really easy because all you have to do is say, what's the distance between that and divide it by 2? What's the distance, right, between this and divided by 2? What's the difference between these divided by 2? What's the distance between these divided by 2? And now you got your midpoints. So what I'm saying is that really the same, but it's very similar. It's a very similar idea. And so I've taken the market idea of pivot points, but instead of saying arbitrarily, only look at last week, don't update, don't tell me anything new now. I'm like, well, why would I want to know that? So instead of defining a week, and right now the settings looks like it's closer to 2 weeks, but whatever, you can change those. But I'm just saying on a rolling basis, keep doing the calculations, keep doing the calculations. What is the mean? But you also have to then calculate the slope of the mean. Now, it's not the same as a pivot point, but it acts in the similar logic. So once again, it's slightly different math, but it's different math trying to do the same way using a dynamic data set. Okay. Cool. Okay. But look, let me tell you something. You can have all the education in the world and have all the best tools in the world, and if you don't have any common sense, you're still going to lose money. Okay. So if you're looking at this like it has to stop falling, I gotta buy it. I should buy it here. Well, what tool do you see that tells you to buy it? Do you see anything that tells you to buy it? Right, Batu? Not that I'm saying you are, but like we got to start first. And what time frame? All time frames, Batu. Okay. And so like I said, even if you're only doing short term, it really helps to know the higher time frames. Okay. And by the way, Batu, do you think it would have been helpful earlier in the day to know that this is where bears are going to sell? Would that be helpful, guys? Okay. That you knew or assumed or had planned on bears selling here, and tomorrow bears are going to sell here. Would that be helpful to you in advance? Okay. Would it also help you to know that those that sell at this price are going to exit at 151.80? Would it help to know that they're going to exit at 151.80 and you knew it yesterday? Let's see, 151.80. Oh, snap! Boom! Huh? Okay. So now what do you want to do? You know what? Once again, this is the extreme. This is the extreme, and you want to do something in the middle. That once again, that's something I don't understand. I don't get it. I don't get it. Okay. Knowing when to exit is key, but what I'm talking about is knowing other people's exits. Okay, look at this. That's what yesterday's trade plan tells us, that right in that zone, okay, is the exit. Cool. Now, your big question is, if you're a bull, are you going to look for something like this? Because I can tell you there's new data out of the UK. Which is likely to affect the Great British Pound. And will it reverse the flow? I don't know. That's what you need to decide. Okay? And that's why we got this giant move. Look at the velocity. It was super strong for a half an hour and then collapsed. Okay? So I don't know what you want to do, but start setting up your lines. Okay? If you're a bear, you know, like if yesterday or this morning you set your limit order, then you're already done. There's nothing to do except move your stop at break even. Okay? What this is showing us is probably something like this. Okay? Okay. So once again, you have to decide, are you bullish, are you bearish, and are you watching are you taking in data as you decide? Certainly don't fight it, yo. Okay? Because once again, seasonality dictates the yen is strong this year, or this time of year. Not necessarily strong, but definitely less weak. You know it. We talked about it many times. The rotation out of dollar from yen into dollars and all this kind of stuff. Out of yen trades into dollar trades. But let's take a look at commodities. Okay, WTI coming down. I think OPEC Plus is going to get together, make a decision here. That'll be interesting. Okay, this coming down should bring CAD down and stuff. Okay. It helps with inflation, by the way. Right? This is going to cool off inflation if oil prices come down. Okay. And it matters, right? You see what's happening here. Okay. Okay, we're one standard deviation below the mean. We're breaching the 21. Okay. The daily 55 EMA is at 70. Okay. And if it heads all the way down there, what it does is it makes this a top. Okay. Gold. Yeah, we can do gold. Sure, for shizzle. Okay. For shizzle. Cool. Well, let me do a smaller time frame analysis. I have it going up here or here. Okay. I have two of the plans based on here. You can see the line. Not bad. Huh? Not bad. I have another line here. Could be worse, yo. Cool. So anyways, it held tight. Now we have a new higher high. Maybe we should use some price action. Okay. And you can see that basically says buy off the 4-hour 21. Cool. Okay, this is very aggressive sort of intraday price action, maybe. You can see it never worked, which is good. And this is the conservative, disciplined, medium to longer term play. And that worked out beautiful. Okay. Yeah, this is a little disappointing, but whatever. That's why they invented stops, right? Okay. Eventually, we got our breakout. So I would expect, remember, it doesn't have to, but if you're using price action, yeah, I would expect pullback. Maybe it's 18.18, maybe it's 18.20. Okay. Okay. One way to check it out is you can cut the corner on the 21 EMA. So you can go insert indicators, custom, 0 lag moving average, 21 shift at 4. Okay, colors. Let's make it super fat. Okay. And this is trying to cut the lag out and should come up and tickle that. Okay. How long can we expect this kind of strength in the end? Why don't you check the seasonality in the day trading course? Or is it the... I don't remember which course. We cover seasonality in one of the courses. Okay. I believe it's all the way to about late October, early November. It's easy, man. It's just seasonality. Look at last year. Look at the year before, year before that, 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 year before that. All the answers are on your chart, my friend. Yeah. So, hey, when's South Africa going to get their stuff together? I don't want to even look. Hey, South Africa, where's my South African brothers and sisters? When are we going to get a stabilized economy where people can invest, countries can invest, companies can invest? Riding in the street is not good for business, I'm telling you. So dollar, meh, yen strong, CAD coming off because of oil, euro, meh, Aussie weak. There's some problem out of China. There's some data issues that look like maybe a slowing down. Pound reacting to higher inflation. Kiwi's kind of interesting. Must be auction week, huh? Swiss. So like ultimately I look at this and there's really... I look at the market as a whole now, and I look at it and like not a lot's going on. Yen is strong, so sell some Aussie yen, sell some CAD yen. That's about it, huh? Grumpy Cat says linear regression. That's not exactly what the math is doing, but it's similar, yes. Marina says never. Bummer. Well, I hope you and your family are safe and everything's okay and that you can go on your life as usual. Every day a little bit better than the last. Gisa is swinging from wins to losses. I think you might want to work on your risk management approach. Yeah, Moreno, but I feel bad because there's so much hope for South Africa. And I know, like in the 90s, I know people going there and everybody loved South Africa and there was so much hope. But then, probably the only time Americans see South Africa on TV is when there's looting in the stores and rioting on the street and tear gas and, and that's what Americans see. And it's not 100% as accurate as it should be. So I feel bad is all. I'm like, oh my God, because that's bad for business. Now what, right? Peace is good for business. I was buying USD. Why? Bought USD yen, 2 pips stop. Why? All right, Gisa, stop trading. No, it's not because of greed and discipline. You have no idea how to trade. What you just described is, if you don't mind me saying, pathetic. So just stop. No, you say you buy greed self. No, you don't. It's ridiculous. What you just said is like ridiculous. Right? So just stop. That's the first thing. Now, if you don't, then hey man, go ahead. Keep doing what you're doing. You sound like a liquidity event. There's no plan there. And it's just so funny. Like, what do you mean stop loss was at 10 pips? You're like, oh my God. Which tells me there's like a 99.9% chance you're going to get stopped out, even if your trade is good. Okay. Well, look, if I give you advice and you're like, I'm not gonna take your advice, but please help me. I don't know how do I deal with that? Okay. I'm just trying to, I don't have much time with you and everybody else here, so I have to cut to the chase. But what you're doing it's just nonsense. Okay. Yeah, I hear you, Morena. Yeah, and but if I've been hearing good things about South Africa since the 90s, time has passed. Right? Like it's been a lot of place. But anyways. So, too bad. So I hope they get their stuff together. But I don't know if you can. But I get it. Like, look, I don't know much about South African politics, but I think every South African I ever met told me the government was corrupt. So, yeah, so I guess if you get rid of a corrupt government, that's good on the long run. But it's hard it's hard to invest when there's blood in the streets as well, right? Oh, these indices you can get at metatraders.com, Charlie. Cool. Okay. So, whatever. So I just hope the best for the people. I also have Cuba on my mind. I'm okay with one less communist country on the planet. I'm okay with that. Is it getting better, Maida? Or are the Black Berets still out on the streets? So if you're scalping the 1 minute, you have to figure out, is this a stabilization off the psych level? Is that right, made up? I suppose everyone's been saying it for decades, if not generations, but like, oh, it can't last. But right? But at least the people are being heard. See, and there's something like, so there's tragedy going on in South Africa, and there's tragedy going on in Cuba. Both are revolutions against corruption. And I don't know, it's somehow like it's easier to empathize with the Cubans. And I wonder what it is. Probably just my ignorance. I probably need to keep my mouth shut and probably get a little more research. So I don't know much about what's going on in either place. But yeah, it's hard to, I think when it comes down to looting, it throws a lot of people off. But I haven't heard that there's widespread looting in Cuba. I don't know though, so there you go. I'll admit that. I'll keep my mouth shut because I don't know anything. Because Cuba's closer at home. No, you can't get farther. There's 1 million miles between Cuba and the United States. Most Americans don't know anything. The only thing they know about Cuba is what they've seen in movies or something about JFK. They're like, what about JFK? We don't really know. Right? So there is 1 million miles, right? Yeah, Meta. And I think that's what it is when you find situations like Argentina, a little bit Argentina. I mean, yeah, Venezuela for sure, Cuba, other places like that. The model has never worked, and we know that now. FD9 says, is it possible we play a standard deviation channel on a 1 minute chart? Do you mean the price action pivot points or standard deviation? Like, I don't know why you would do that. Again, I don't understand. So let's do something different. Instead of like, do I buy 2 standard deviations below and do I buy above? Oops, that's not even set properly. I don't have the other one. Here's what I'd rather you do. You get a trigger. So you know that this is going to be support. Okay? So you trap it like I trapped it. Okay? Support, resistance, okay? And then you have this breach. So what do? You're going to buy it here and take it north. Is it 1 standard deviation, 2 standard deviations, 3A2, 50%? So who cares? Just do it. So if that's true, Meta, the people are chanting for freedom. That sells. That sells. People sit and watch their TV going, I appreciate them. I empathize, right? People see looting and then it taints everything, even if the general revolution of what's going on is good. But like, oh man, I can't get political. See, every time I get political, I'll probably get shut down on YouTube and flamed and all that kind of stuff. But let's just say in a political revolutionary movement, whatever it is, and it happens in the United States, as soon as people start robbing liquor stores, it diminishes the revolution. It just kills for people outside of the culture that is pushing for change. Everyone else is then an observer, right? So if there's a minority rising up or the people are rising up against the power, whatever, as soon as looting is involved and people are like, wait, what is this? Or, what's going on? You know, and that's the part I get like, oh man, you don't. And very often it's the media grabbing onto it. So you might find like maybe in South Africa, like 12 people looted a store and now every single news channel globally shows 12 people robbing a liquor store. That might be the case. But I think what the glimpses I've seen, even just on holiday, is just, it looks to me like widespread looting. And you're like, well, that's not a revolution. So anyway, so I feel bad is all I'm trying to be. I'm a good person and I feel bad because I want positive change in South Africa. And very often you need other people to come in and support you. And ideally, like if the United Nations comes in and the World Bank comes in and, you know, the American government leans in, the European government leans in, all that kind of stuff, to have a positive change and help the people of South Africa. But if there's looting, no one's going to back that up. And it isolates South Africa if that's the message that's getting out. So anyways, messaging is, I mean, you'd be surprised how important messaging is to a revolution. Messaging is very important. It's all marketing. So you can get 1 million people on the street and you change the marketing, you change the way it's presented to the masses, can have a dramatic, it's almost the most important thing. Okay. Cool. Yeah, Gisa, hey, all we're saying is you're not doing it right. Okay, that's all. So hopefully you're strong enough to sit and learn from people that have been trading longer than you've been alive. Right? Reina's like, we'll never know the truth, and it's not a revolution. It is criminal activity. And if that is the case, like, then no one's going to back up the people of South Africa, right? Which to me sucks because, like I said, the South Africans I know are good, hardworking people, right? Like, so I always hate when the bad apples outshine the good people and it's always easier to report that. It's always easier to believe the bad. You know, it's easy to be negative. It's really easy to be negative. It's hard to change the world. If, for instance, hey, are the MetaTraders for MT4F or MT5? Yes. Yeah, it's both. All right. Okay. So you see, guys, by the time you wait for standard deviations and stuff, you're better just to know price action and be able to trade it. So the most important thing, even when scalping, is knowing that this level here is important. Not to buy, but what I often do is trap it like I did. So I did all of that yesterday, I think. Right? So we trap it. And then you see the higher high. So now you have permission to engage and you buy the higher low. At 1 standard deviation? Yes. At 2 standard deviations? Yes. At a 382? Yes. At a 50%? Yes. At a 618? Yes. On a 5-8 cross? Yes. Just, dude, are you going to buy the higher low or not? Okay? That decision is the most important one. Whether you buy it here, here, or here, or here, I don't care, dude. By the time we're up here, it won't matter. Okay. The one interesting thing is no matter where you buy it, your stop is likely to be about the same. So the most aggressive will buy it quick. They might just say, oh, I'll buy a 50% retracement. Right? Someone else might buy it slow and wait for the 5A cross. The interesting thing is the slower one has the same stop as the faster one, and the faster one is aggressive but has a smaller stop. And the more conservative one is slower and therefore has a bigger stop. But both of them are going to put a stop loss right below support because that's what you're supposed to do. Okay? One of the ideas I pose to you is like, wouldn't you just be better off selling? And so while a scalper might be too slow and miss this, they're also going to be too slow and miss this. Okay? What I want you to know ahead of time is whether you're a buyer or a seller. And sellers live here. You understand that? Okay. I don't know how many, but that's a lower high after a lower low. There are orders there. Okay. Nelson says, I'd like to know how you aced a scalp like it's nothing. Who? What trade? I'm not following you. Well, just go for it doesn't sound right, Charles. But I'm more interested in price because everything's dictated on price. Yeah, you read me wrong. Yeah, I'm not following. That's what I'm saying. Yeah, but whatever. Yeah, you're probably... So bears, you should get ready. Okay, bears? Bulls did what they did. So as far as I'm concerned, this trade is already over. It already occurred. It's already gone. A long time ago, in fact. Look, 12 minutes on a scalp is an eternity. Okay? Now, the higher it goes, the more bears are going to be there. Okay? So anyways, as I'm starting out my charts and speaking live on YouTube, if I misspoke and offended anybody, I apologize. I'm a good person. I want people to succeed. I want people to have freedoms. I want people to be able to improve their standard and quality of living. I want people to retire and be able to live a dignified life. And I want people to be able to have assets left over for future generations. So if that can happen to an average person in South Africa, if that can happen to an average person in Cuba, I'm happy for them. Okay. How did I do, by the way? Was I clear about that? Maybe you could click the like button. Maybe you can click the like button. To me, this is just evidence that if you don't know if you're a bull or a bear, you're doomed. You're going to get crushed. Right on, JGB. I appreciate that. Faux show. By the way, are you guys using my idioms in your personal lives? Like, are you standing at the bar and someone says, "Hey, do you want another drink?" And you're like, "Oh, for show." After my wife looks at me like, "What are you doing? Why do you talk that way?" Oh, I see, Nelson. Yeah, cool, right? Well, look, guys, look, I want you to think about this. And I did training, I think it was last week, where we just talked about where the orders are. I want you to practice that over the summer when trading really is quite mediocre. I want you to practice, like, where would a bear sell? Where would a bull buy? And get better and better and better and better and better and better at that. Look, it should be obvious because you're good at analysis. You're not trying to like pick a way to make a quick buck. You should be able to look at your charts. Your charts are telling you, they're giving you information, and you're choosing which algorithms, like moving averages, pivot points, whatever, zero lag moving averages, volume indicators. You could have, like I have Fibonacci here. You might have price action pivots. You might have market pivots. You have all this information, and you can add and remove any of these statistical analysis tools to help you make decisions. What decision? Would you buy this or would you sell this? And you're like, no. Okay. Where would you buy and where would you sell? And that's what you should be determining, because you know many other smart, intelligent, and good-looking people like yourself are also trying to make the right decision. Where do you buy? Where do you sell? Where do they buy? Where do they sell? Now, you might be in disagreement about whether you should be buying or should be selling, but the analysis, you should both agree. Do you understand? We should both agree whether we're a bull or a bear. I'm like, oh, I'd buy it down here. And you're like, yeah, I'd totally get out as a bear. I'd totally bail on that. So if that's your entry, I totally get it. And if you're a bear and a bull says, oh, well, here's my price target. And you're like, oh, that's your price target? Cool, man, because that's my entry. And we should agree. We should understand each other. I want you to really write this down or learn it somehow. Memorize it or absorb it into your spirit, okay? This is not a battle or a zero-sum game, as I said in my book 15 years ago. I have come to learn, and maybe through maturity, okay, that this is a symbiotic dance. It's not a battle. If you're battling, you're probably doing it wrong, okay? So instead, I want you to think about, where will bulls get their turn? Where will bears get their turn? And incorporate that into your own analysis, because now you know to buy where buy orders are going to be, and you'll know where sell orders are going to be, and you can incorporate that into your price action. So for example, let me just draw a market over here. Okay, whatever market. This is almost always logical resistance. Almost always logical resistance. Almost always logical resistance. Meaning you can plan for it when you're still at the bottom. Okay? So when you're buying here, you're like, yeah, that should be an out. If you buy it here, yeah, that should be an out. And right? And why? Because you know bears are going to challenge you. Or other bulls are going to take profit. Okay? And here's the other secret, actually. Remember how I teach you and I'm like, are you a bull? Yes. Is the market bullish? No, it's bearish. Don't trade. So in a situation like I just outlined, the market is bullish, and if you're a bear, really you shouldn't trade at all. Here's the really interesting part about trading. Bulls buy, let's do this in yet another color, gray. Okay, we're going to do gray. Bulls buy here and take profit, and that's what this is. And then they buy it back, and then they take profit. And then they buy it back, and then they take profit. And really, very, 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 very few bears are actually participating. There are some, of course, but the vast majority is the smart bulls buying low and the smart bulls taking profit high and the smart bulls buying back again. And the smart bears, are the smart bears selling an uptrend? You think a multi-billion-dollar hedge fund is that dumb? No, dude, they're pretty smart people. They have pretty good educations. Okay? They talk about the math, right? So in this case, they're waiting for this, and that's when a bull should stop buying. A bull freaks out on the lower high and is slaughtered on the lower low. Okay? So once you realize that bulls get their turn where you can get a day trend, a weekly, like a trend that lasts a week, a trend that lasts 2 or 3 months. And inside of that, there are smaller opportunities for bears, but generally speaking, it's a bull buying low, taking profit high, buying low, taking profit high. And when the market changes, they get out of the way and the bears have their turn. Therefore, you never have to fight. You never have to be smarter than the other person on the other side of the trade. You simply have to answer basic questions. Are you a bull on euro dollar or a bear on a euro dollar? The second thing is, are market conditions favorable for your bias? If the answer is no, cool, man. Don't trade. You won't lose any money. Okay? And if you're in the middle, you're not buying at support and you're not selling at resistance, you are a pig. And pigs do get slaughtered. Okay? So you're either a bull, you're a bear, or you're a pig. Bulls buy dips and uptrends, bears sell rallies and downtrends, and pigs get slaughtered either way. All right, so just an update on American COVID. 175 new cases of COVID in Jacksonville, Florida. It's not where I was, by the way. I just happened to hear about it. Of the 175, 171 were not vaccinated. So you might get a lot of news related to spikes in COVID, but it can only spike so far because more than half the population has been vaccinated. So the market, the population has either been inoculated or is naturally immune, and there's a few stragglers, but that that happens. So be careful on the news. I don't know if it's going to it feels like the news is going to get radical, like COVID's out of control in the United States. It's people vacationing and all that kind of stuff. That might be true, but it cannot. I mean, by definition, if half the people cannot really, there's a 99% chance you can't get it. So let's say if it's statistically impossible for half the population to get it, then it can't be anywhere near as bad as before because half the population statistically can't get it. So now the worst would be at least 50% less bad. So then from there, it seems that many people are just naturally immune. They probably didn't get vaccinated, but they probably did get exposed, and they're probably immune naturally. So all I'm saying is be careful. Be careful with how the media reports it. It may be true, it may not be true. Just be careful. That's all. Okay? Am I anti-vax? No. So I'm vaccinated. My wife's vaccinated. My children are vaccinated. I went on vacation last June, right after the June Fed meeting last year. I took my wife and kids to the beach in Florida. And we spent a week there surfing, and it was great. We were fine. Didn't wear a mask. Stood in large lines. So after the Fed meeting this year, I sent the wife and kids to Florida to the beach. Without me, I stayed home to work. And then 2 weeks later, I went to a different beach, and we went with friends, and we hung out in lines, and we went go-karting and zip lining and surfing and went to super busy restaurants and all that kind of stuff. So hopefully we're fine. But this year we're vaccinated. Last year, of course, we were not. It's all good. Hopefully nobody gets sick. But I don't know if you heard on my choppy live streams, and I'm going to try to work on that laptop, see what's going on there. But absolutely every hotel, every restaurant, every bar, any company that services the tourists. Okay? Massive, massive, massive shortage of labor. Massive. There are millions and millions of people without a job. I can tell you right away, I could have walked into any restaurant, any bar, said, look, I have no experience. None. Will you hire me? I need a job. They would take me right there on the spot. Literally, you can come to work now. There's something you can do. Okay, you can wash dishes. You can bus tables. Do you speak English good? Okay, have you ever been a waiter? No. Okay, well, we're going to teach you. Like, I'm not kidding. Right there on the spot. Okay? I could have, and in any hotel, any bar, any restaurant, you want a job, instantly hired. Okay? Amazing. So there's millions and millions and millions and millions and millions of people on unemployment, and I'm telling you, the restaurants, hotels, bars, and tourist other kind of service providers like mini golf places and stuff, they are begging for people. Begging. Okay. So, could be very interesting what happens in September. But I've never seen it. I've never seen it like this. Our hotel literally didn't clean our rooms the whole time I was there. There was no maid. They only clean the room when you check out. The restaurant had no waiters. None. Just crazy. Okay. The first restaurant we went to, I talked to the bellhop, because you always do. That's I'm trying to teach my kids how to check into a hotel. You talk to the bellhop. Hey, where's the action, bro? So he said, oh, you go down to this restaurant over there. It's the best one in town. We get there, and it's a 3.5 hour wait because there's no staff. We had to call 8 restaurants. By the time we finally got to one, it was awesome. Really awesome, but packed. There were hundreds and hundreds and hundreds of people just in this one restaurant. Crazy. They can hold 900 people, and it was packed. And our server was good. So I think these guys make a lot more money and they make much bigger tips because it's a cool restaurant and stuff. But he's like, look, we just hire warm bodies. We don't just, he's like, this is my 4th year working here as a waiter. And he knew his stuff. It was great. And so I've never seen it like that. Just crazy disequilibrium. So I'm an economist. So this is where, if you don't understand me, what I'm talking about is there's a huge mismatch between supply and demand. And as an economist, this mismatch really only happens when the government steps in. Things like rent control, right? Things like minimum wage. Right? Like when the government says you cannot pay someone lower, or on the opposite, rents cannot go higher. Now it sounds good. Don't get me wrong. It makes sense. Like people should earn a decent wage. I agree with that. And people should be able to afford housing. Yes, I agree with that. But the market will dictate that. The government will come in and try to then step in and manipulate the market, and it never works. By design, if you do the math, it fails. It's destined to fail. That's what the math shows you. Every single economist, I was going to say, well, I'm sure they're crazy economists, but economists agree that there is very negative consequences for the good intentions. And so I had made a comment to my wife. I'm like, this is really cool for me that has studied economics now. And I'm an entrepreneur. So I've really been in tune with economics for a million years. But now it's like, I get to see this play out. I understand extending unemployment benefits is designed to help people, right? And I understand giving free money to people when they don't have money is supportive to those people in that moment. But I also know, I've also seen the models, I've been taught the models, and the models will say it doesn't frickin' work and it causes way more problems than it solves. And so now here we are in the real world, and I see a tourist resort packed with tourists. Money is flowing and there's no workers? It's crazy. I'm telling you, it was crazy. It was an eye-opener, like no waiters, very few bartenders. So like I thanked the bartender for his service. I thanked him for his service like he was like he went to Afghanistan or or Iraq or something, like he was in the military. I thanked him for not taking the unemployment instead of going to work and with some dignity, and earned a salary and worked his ass off because there were so few workers. So he had to work twice as hard just to earn his regular salary. So I thanked him for it personally, but also with money, right? So it's really interesting to now have lived through the model. And I can tell you, if you do rent control, suddenly nobody's going to have a place to live. the government thinks they're making it easier for people to live somewhere, it'll end up being a shortage. Okay? Same thing, you raise minimum wage because you want people to have more money to buy stuff. You will find out that it will not work and it'll cause way more problems. And here we are. I think what the government should have done differently is been much more targeted in the relief that they gave people. But now that would be discriminatory. So the government can't come in and say, well, blue-eyed people get $1,000 stimulus checks. Green-eyed people get $2,000 stimulus checks. And brown-eyed people don't get any stimulus check. Or some version of that. You can't do that. So they say, well, we want to help 3% of Americans. So let's give money to 100% of Americans. And of course, you know that that's not the right way either. It is causing lots of disequilibrium. Supply and demand do not match. And it's because of the distortion created from government intervention. And you see it everywhere, crowding out of loans and crowding out of, you see it in the bond market, you see it in the banking system, right? There's unusually low demand for loans. Why? Everybody got free money from the government. They don't need a loan. So now banks are hurting, right? It's just funny. Like, there's so many negative consequences. So I had to drive several hundred miles to get to Florida. Many, and I'm telling you, many car lots had very few cars. My wife and I noticed several car lots as we drive down the freeway and drive down through little towns throughout, Georgia, Alabama, Florida, where the highway goes through little towns and stuff. That we saw several car dealerships with absolutely no cars, which is partially to blame for COVID and some of it partially to blame on COVID relief, which is really interesting. So car lots with no cars. It was just amazing. So anyways, that's enough of the lecture. But my excitement is that there you could see the unintended consequence. And it reminded me of being rich in a poor country. I have money to spend, but nothing to spend it on. So in that situation, you take your money and you go somewhere else. Okay. So if you go to a fancy hotel, you expect good service. No service? Like bad service. You're like, oh man, the service is bad. I told her, don't put an umbrella in my cocktail. And she put an umbrella in my cocktail. It makes me so mad. Like, people bitch like that. But I'm talking about, dude, you pay good money at a hotel and they don't even clean your room. It's unbelievable. Right? Unbelievable. So, study your economic models. It's really interesting. Okay? And when a government promises you everything, oh, Matt, right? We will take care of you. You'll have a living wage. You will be able, the government will ensure that you have an affordable place to live. The government will make sure you have food to eat. The government will ensure that you have medicine when you're sick. The government will ensure that you'll have money to retire. Fast forward 50 years of that, you have no decent place to live. You earn no money. You are hungry. They promise you proteins and they give you beans. 50 years of will ensure that when you're old, you'll be taken care of. You will not be taken care of. When you're sick and you have COVID, sorry, we don't have medicine in our hospitals. And everybody will have nothing. And it's, right? And answers like Venezuela, but you can go back through hundreds of years of this decision-making process. But let's just say in the last 100 years of this type of decision-making process, but you can go back, let's say 200 years. Let's do that. Go back 200 years. You will find no examples of it ever working. It's never worked once in 200 years of social experiment. Like, we're trying to figure out what is the right economy to support a society. What's the right type of government to support a society? All this is being worked out. Okay? And what we have found is there's not one example of socialism or communism that has ever worked, not even close. And there are many, 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 many examples of capitalism working. We know that. It's factual. Capitalism has flaws, but they can be improved over the years. So you could have sort of the American version of capitalism. You could have the Chinese version of capitalism. You could have the Canadian version of capitalism. You could have the French version of capitalism. You could have the UK version of capitalism. But capitalism is capitalism is capitalism. They're not exactly the same, but that's for society to figure out. But this idea like, don't worry about it, someone else is going to solve your problems, the government's going to take care of you and provide for you like your mommy and daddy, it doesn't work. It's never worked. And so there I am sucking down my cocktail on the side of a beautiful pool, on the beach. I can still hear the waves crashing behind me, but I'm too sunburned to be out there anymore. I got to be in the cool water, and the waves have been crashing against me for hours. I'm like, I'm exhausted. So you go to the pool and you suck on your cocktail, and I'm like, this is cool, but it's fragile. Meaning there I am in a beautiful hotel, in a beautiful pool, sucking down my cocktail, and I can afford all this. But if there was no bartender, if people didn't put chemicals in the pool and it was slimy, right? If the hotel couldn't make money to take care of it, clean it, paint it, maintain it, then it'd just be a pile of rubble, and it would suck. I'm like, it would suck. And right now I was on the verge of like, yeah, I know, first world problems, right? Like, what? There's no waitress walking around bringing cocktails to me. I have to get up and go to the bar. Yeah, that's where it starts though, right? That's where it starts. I don't want America to be the place where I can't even go on vacation because all the hotels on the beach are closed. There are no employees. Nobody else can afford to go there. There's no work. All the restaurants are closed. There's just nothing. There's nowhere to go. And by the way, there's plenty of economies that have ended up that way over time. So that's kind of the scary thing. So hopefully we can get through this COVID thing together. But from an economist point of view, so I'm not commenting on Democrats versus Republicans. That's up to you. But as an economist, I guess it's a strange thing because back in 2008, when the economy crashed, the government did nothing. Okay? Right? The government did nothing. It was all central bank. And it took forever to get out of that problem. It took a whole 10 years because the government didn't do anything. Okay? And now, a year after COVID, the government stepped in, or 6 months or whatever it was like way after COVID. The government steps in and then steps in and then steps in. And like, dude, the problem isn't people having money. Most people had money. Most people had jobs. And I mean it. Most people, okay, had jobs. So giving them money didn't solve COVID. So there was problems with their response. And hopefully it's not too bad. And I don't mean the debt-wise. We'll figure that out. There's always a way. I mean, it can get ugly, but there's a way out of that. But if people don't go back to work, that's a real problem. Right? That would be a problem. Okay? And it's a real problem. I'm really afraid. What am I going to do if I hang out at the Ritz-Carlton and the service is poor? What am I going to do? You know what? But the whole world comes crashing down. So anyway, so there's some of it is me being facetious, but ultimately there are some pretty scary negative consequences that can happen. Luckily, we are in a community where we can get together and watch 5-minute candles in real time go from up to down to up and to down. What does this mean? This market is still logical, and you can learn how to trade it. Okay? If trading is mysterious, then you're probably not doing it right. Or to say it differently, if I can draw it ahead of time, then maybe there is something repeatable. And if it can be repeated, it could be learned. And maybe, just maybe, I'm half decent at teaching. And if you can learn this from me, you can take care of yourself and your family and your loved ones, maybe even your neighbors, your cousins, your kids, all these things, your kids' cousins and your cousins' kids. Because no one else is going to take care of you. So I hope this was a helpful day. Thank you for being here. I'm here for you as much as I possibly can. I don't remember the last time I had a day off, but then again, I'm not asking for one. So thank you for being on my team. Thank you for being here every day. Thank you for your patience when things are not smooth with things like running a live webinar. But keep up the good work as well. Make sure you understand the longer game. If you're in my live trading groups, we are meeting today at 2 p.m. Okay. And we're going to have some fun. And by fun, I like making money. It's always my answer. Like my wife says to me, so what do you want to do today for fun? I'm like, I like making money. Well, besides that, why? There's something else? Yeah, I like racing cars. Oh, wait. I like you, baby. I like you. Okay. So peace on earth. May the pips be with you. May your profits be above average, because I like you too. I'll see you.